Hello, everybody. In the current affairs this week, first and foremost, the Indian stock markets. The Indian stock markets Nifty was up by 3.46%, the mid cap was up by 2.04%, and small cap was up by 1.33%. This week, India witnessed an FII inflow of 10,874 crores and DII pumped in money into Indian stock markets to the extent of 5,774 crores. The US stock market, Nasdaq and S&P 500, as also the 10-year GSEC in the US was quite unchanged. There was good news from the commodity market. The price of Brent crude came down to $75.95 to a barrel, which is a decline of 3.71% this week. This is a very good news for India, as we all know that India is a major importer of crude. If you look at the precious metals market, they were also on a decline this week. The international prices of gold came down by 2.42% and silver went down much sharper by 8.67%. This week I would like to talk about the way the Indian stock market benchmarks are constituted, and we at times make a mistake by comparing these benchmarks in terms of their valuations and the price earning ratios very easily without appreciating that the way these benchmarks have been constituted, which represent different kinds of industries, is very different, and we need to look at it from that standpoint. In order to explain that, let me give you some details. When it comes to the industrial sector related companies, the benchmark weightage in Nifty of those companies is just 5.60%. That in mid cap is 12.90%, and in small cap it is 23.80%. When it comes to companies which are into materials, the Nifty has got a weight of 7.60%, mid cap has got a weight of 13.20%, and small cap has a weightage of 19%. When it comes to companies which are into the financial sector, Nifty has got a weight of 26.10%, mid cap has got a weightage of 27.30%, and small cap has a weightage of just 12.60%. When it comes to IT sector companies, the IT sector companies in Nifty has a weightage of 17.30%. Mid cap has a IT weightage of 3.80%, and small cap has a weightage of IT companies to the extent of 6.80%. So what we observe is that Nifty is more tilted towards financials and IT and less towards industrial and materials related companies. So what happens is that if the prices of the stocks which are into industrials and materials are on a rise for the reason that the world sees that India would be the new manufacturing base, then naturally there would be an appreciation of small cap benchmarks which could be much higher than what the Nifty would appreciate. So comparing these benchmarks so very interchangeably and easily is not something which is very wise, because all these benchmarks constitute different stocks, obviously, and also the sector weightage in each one of them is quite very different. Another little unfortunate news which I would like to share is that the startup funding in India has seen a decline in the year 2023 by 72%. This year, the startup funding in India was just 7 billion US dollars against the startup funding last year, that is year 2022, which was to the extent of 25 billion US dollars. Maybe the reason for it could be the way the US economy was. Let us see what happens in the year 2024. Thank you.